Tuesday, May 7th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning, aside from looking at the markets, I want to look at the dollar index and how the historical cycles are looking for the dollar index. Why I think the dollar topped in January of 2017 and it will only bottom probably around 2024, 2025. And why the dollar index is not a good hedge against the debasement of fiat currencies. The dollar index is just a measure of the paper dollar or the Federal Reserve note against other fiat currencies that are up to no good, of course, that are inflated out of thin air by the national governments and national central banks. So it's just before 7:30 a.m. London. Yesterday, of course, was a very interesting day. The Dow dropped over 500 points, opened around down 450 at 9:30 New York time, and then the market just rallied and closed the day down 66, the Dow, which is not much compared to where it was before. S&P closed down 13, almost down 0.5%, and the Nasdaq as well closed down 0.5%. So was it the PPT? Was it the Fed? Maybe there was manipulation of the markets. But I noticed last night when the futures reopened that the Dow was down 150 or 160. So what's happened? Well, it says here, markets replunge as LITECOIN confirms tariff hikes after China reneges on promises. So it doesn't look like this is getting any better, the trade negotiations. And I also seen some headlines that are not very encouraging. Like, for example, Beijing puts army on heightened alert over U.S. warships in South China Sea as tensions soar. So, that's not good either, that we have that kind of tensions. So where are we this morning? Well, just to tell you how crazy these markets are and how much more volatile they're getting. When I started preparing for this video about 15 minutes ago, the Dow was down 150. Right now we're down 39. So I don't know what's happened there. So that's where we are right now, down about 39 at 26,398. S&P is down 6, 29.27, and the Nasdaq 100 future is down 14 at 77.80. Precious metals, gold also came off yesterday after being fairly firm early on. We got up to 12.86 and then dropped back down to around 12.77 during the day. Right now, though, we're at 12.8270, up about $2. So gold is up a little bit. Silver is up about 4 cents at 14.92. So I think there's a lot of volatility in the markets, and I think it's going to continue. So what about the currencies? Before I get onto the dollar index, well, the pound's a little stronger. It was weaker yesterday. We're up 0.18%, 131.20. Euro as well is up 0.15%, 112.16. Dollar is unchanged against the Japanese yen, 110.75. Dollar slightly higher against the yuan, 67.80, up 0.1%. WTI is 62.50, up about 10 cents. And Brent is at 71, down about 10 cents. Crude oil also recovered, with the stock market recovering intraday yesterday and not finishing down that much. Bond markets. I saw some of Greg Manarino's videos, and he thinks they're pumping the bond market to get yields down, so to encourage people to go for yields, go for capital gains in the stock market. That could be true. Right now, the 10-year yield is at 2.49. It has dropped about 3 basis points this week, just below 2.5. The 3-month to 7-year spread is now negative 4 basis points. So the curve has inverted back, from 3-month to 7-year. Dollar index. Yes, I'll first read about the history of the dollar index. Okay, it says USDX started in March 1973, soon after the dismantling of the Bretton Woods system. At its start, the value of the US dollar index was 100. It has since traded as high 164.72 in February 1985 and as low as 70.69.8 on March 16th, 2008. That day in 2008 also happened to be the high at the time in gold at 1,031. It was also the day that Bear Stearns had to be saved by JP Morgan. JP Morgan took over Bear Stearns. So I remember that day well. Why was it started in March 73? We have to ask ourselves that question. What was significant about that period? Well, before that, all currencies were fixed, or they tried to be fixed against the dollar, and the dollar was fixed against gold, a weight of gold, $35 per 1 troy ounce. That was, of course, until 1971, August 15th, when President Nixon suspended the convertibility of the dollar or Federal Reserve note into gold. And it was temporary, by the way. And here we are 48 years later, and it's still not convertible back into gold at $35 an ounce, right? So in the interim there, between 71 and 73, they try to keep the other major currencies fixed against the dollar, but it didn't work. Under a fiat money system of irredeemable fiat money like the dollar became, it was very hard to fix currencies because there was no discipline. So they created the dollar index basically to measure how the dollar was doing against the other major currencies. And that's what it's about. But it's not against gold. It's against all the other crappy fiat, irredeemable pieces of paper. So right now, the index is, the weighting is 57.6% euro. So when you talk about the dollar index, it's almost talking partly, the euro is very important. Japanese yen, 13.6%, pound sterling, 11.9%, Canadian dollar, 9.1%, Swedish krona, 4.2%, Swiss franc, 3.6%. Of course, before the euro was introduced in 1999, I think, 99, it used to be Deutschmark, French franc, Dutch guilder, Italian lira, were part instead of the euro, so the weightings were a little more balanced. So what I'm trying to say is that, for example, gold, 1 ounce of gold was around $100, I would say, in 1973 when the dollar index was created. Right now, where are we? Almost 1,300, right? Dollar index, where was it when it was created? 100. Where are we now in the dollar index? Well, just below 100, 97.40. So what I'm trying to say is that it's a measure of like drunks or drug addicts. Which drug addict is doing better? So the dollar index, yes, it's important in the short term sometimes for the direction of precious metals, but in the long term, it's just like don't follow it too much. I've said this in the past. Be as it may, though, let's look at the long-term cycles. The dollar index seems to have like a 7 to 9 year cycle, so on average 8 years. On this chart here, it goes back to 1968. I know it was created in 1973, but you can measure it back to 68. And you can see that in 1969, there's a top there in the dollar index. And then a bottom in 19 78, which is about 9 years. So that bottom was at 82.07, and then there's another top in the dollar index, as I said earlier, at 164.72. That was in 1985. So that took about 7 years. That's, that from that bottom to that top. And then there's another bottom in 1992. So that took about another 7 years. And that bottom was at 78.19, lower than the previous bottom. And then from 1992 to 2001, so that top took about 9 years, so a little longer. There's a top there at 121.02 at 121. And then from 2001 to 2008, dollar index dropped, cycle was downward, and it took about 7 years, and it was that all-time low there at 70.69, and that has been the low ever since then. So that was the day, also the period where gold topped at 1,031, and you can see that in spite of the dollar having rallied since 2008, gold has also rallied. So looking at the fact that we've seen 7 to 9 year cycles, 8 year cycles, to me, it looks like from 2008 to the top in the first quarter of 2017 at 103.82, another 9 years there. So that's why I've been saying that the dollar has topped. I know if you look here, since the first quarter of 2018, the dollar made a low of 88.25. Yes, it has rallied, and we're now at 97.42. But I think it's just a correction in a downward trend. And looking at the past history, and of course, this doesn't mean it's going to happen, but there's a good chance and probability that it will. Looking at that, it looks like we could be going down for another 7 to 9 years from 2017. I mean, you add 7 years, that's 2024, or even 2025, 26. We could see the dollar continue to go lower and to make a new low. So I would say the target would be somewhere below 70.69. So that's what I'm trying to say here. Yes, the dollar does rally against some currencies. When the stock market drops, the dollar index looks a little better. But in the long term, I think, as I said, it's just a hedge against other fiat currencies. Just a game, betting on the drunk or the drug addict that is more hungover than the other, or spaced out, whatever you want to call. And that's why I'm sticking to the precious metals. You see that since the dollar index was created, if you had hedged with the dollar index, you wouldn't be doing too well. But if you had bought gold and silver, you'd be doing very well. So let's keep an eye on the markets this afternoon. I think things are starting to change a little bit. Volatility is increasing, and that could mean a turn from the previous direction of the stock market, which has been up since Christmas Eve 2018. If you enjoyed this video, please hit the like button, subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.